Hey, this is Trader Travis again, back with another video. Man, the market, it's like schizophrenic. It can't make up its mind which way it wants to go. Well, I personally think a bottom is forming. I think it's about to bottom out and start going back up. Now, whether it goes back up quickly or slowly, I don't know. But ultimately, our mantra in the Success Academy is we create what we see, not what we think. And we always say the market doesn't care what we think. So yeah, I can have an opinion. And I actually find it fun to have an opinion and then kind of see if my opinion unfolds over time. But it's not like I want to, I think the market's going to go up here in the next few weeks, right? But I'm not like loading up my account to invest based on that opinion. Because the secret to my success is looking at the stock market like my dance partner, right? It goes left, I go left. It goes right, I go right. And I'm getting my left and right wrong here. But basically, you just go with the ebb and flow of the market. The market is always right. Don't try to predict and argue with it. The market is always right. Second thing is just set yourself up to win no matter what the market does. And then you can be like that Zen investor who kind of just sits and observes. Right? We're not triggered by the day-to-day swings, or we don't care. We're set up to win no matter what the market does. Now, what I'm going to do is make this video short. I am exhausted today. I'm exhausted this entire week. And I just don't feel like recording a long video today. So I am just going to answer a couple of questions people asked from YouTube. But first, just kind of give you, as in full transparency again, give you a look at my portfolio again. It's down. It's the same thing it's been doing the last few weeks. But people are like, you're in good spirits. I'm like, well, yeah, because my account is fully insured. And my insurance is a 3-year insurance policy. So for the next 3 years, I'm good to go. I don't care what the market does for the next 3 years. I can, if I get tired of seeing the losses in my account, I can file in some kind of insurance claim and get any of my original investment back. So of course I'm in good spirits. And my portfolio is protected. And so that goes to one of the questions someone asked me here is that, what percentage of a 10K account would you use to purchase insurance? And actually it varies. If you're not part of the mentorship program, I kind of stay away from answering questions from people unless they're part of the program. If you're part of the program, post it in the members area so I can answer it in context with what you're learning. And the reason why is when you answer a question for people that's not being mentored, it's kind of taken out of context. I could give you a percentage of a 10K account, but that's maybe not the right question. The right question is, okay, what's an overall wealth building plan I should put together? And so I don't want to kind of just answer questions in piecemeal. I'd rather truly mentor someone and get them set up for success in the long term. But we do, cover that in any of our training programs. And if you all want, if you're interested in insurance training, what I can do is it's currently a bonus in the Success Academy. So if anybody doesn't want to enroll in the Success Academy, let me know. What I can do is possibly make it just a low-cost course in and of itself and show you how I insured my mom's portfolio and then walk you through, how do we determine how much insurance we get and things like that. And then that kind of leads to the next question someone asked. They said, can I go through the steps how you switch from bullish to bearish? Well, again, we teach something in the Success Academy called the 4 stages of a market crash. That's how we determine. And usually if you're in between stage 2 and 3 is how we switch between bullish and bearish. And when we cross over from stage 2 to 3, we lean more towards bearish. But there are times during corrections where we might go all the way to stage 3, maybe even touch stage 4, and then the market reverses. So they're not, none of them is guaranteed. It's just kind of a systematic way to kind of just evaluate what the market is doing instead of thinking, or evaluating based on, or investing based on how you feel. You want systems. The next system for those who are not part of the Success Academy, which in my opinion is one of the best $100 you can spend, a couple of hundred, is Market Club, right? That's another system we use, right? Market Club has trade triangles. They were developed by a professional hedge fund trader, former floor trader, right? And, he knows how to spot the buying and selling of institutional investors. So he created software with his buddy, and it gets you out before the market tanks here. So we can look at just a more recent signal. This is the S&P 500. And we can see here that before the big drop, we had what they call a weekly red trade triangle. Okay, that signals you that, hey, in the next few weeks, the market may be down. The monthly red is like, hey, over the next few months, the market may be down. And so it kept you out of that heartache here if you jumped out on a weekly. Some people waited for the monthly, and so you had a little bit of pain, but it's there to designed to keep you out of the major pain. So I'm going to do a max here. It only goes back to 2012. So I'm going to take off the weeklies where you can only see the monthlies here. And you can see it did trigger some monthly reds and greens along the way during corrections. But again, it's designed to keep you out of the major pain where, the pain like, hey, I lost 50% of my account and buy and hold. No. If you follow this system, how do you know switch from bullish to bearish? You should be out of the market before it drops 20-30%. So that's one of the low-cost systems you can use. So just use software like Market Club. And again, I think it's one of the best couple of hundreds you can invest because, yeah, it keeps you out of this pain right here. You know how to switch from bullish to bearish is when everything turns red like it is now. Or during good times when the market is up, we can look here. Let me do a 2-year chart. We can look at the monthlies, right, and look at this one right here. This monthly was on March 4th, 2019. You did not get another red until almost a year later. And so you can look at all the profit you would have stayed in there if you were a stock investor. If you were an option investor, you may not go off the monthlies. You may use the weeklies to time entry and exits, but even still, you would have extracted profit along the way with a system like this. Basically, you want to kind of make investing unemotional. And I was talking with someone today about this, how if most of your investing results relies on you and your decisions, you're going to eventually fail because we as humans, we fail ourselves, right? There are people who panic sold last week and then jumped back in the markets on Monday. So your results are dependent on you timing the market correctly. No, that is not how you win. So again, you want to set yourself up so that you win no matter what the market does. Another way you set yourself up so you win is you take your active income. Active income is like buying calls and puts. And I was telling somebody, like, have you ever noticed there are like no 67-year-old successful day traders on YouTube, right? Reason, my theory is because they came to the same conclusion as me. You get tired after a while of staring at a computer all day trying to make money, and then life happens. Cancer happens, strokes happen, kids happen, divorces happen, right? Life hits you. You can't, I said I wouldn't make this video long. Here it is long again. But anyway, after a while, you just realize that if everything's dependent on your effort, there's only so much effort you can put into a day. So I'm like, hey, you should have the majority of your money passive. Just buy and hold, right? So that way you're making money without your effort. So where was I going with that? I think I was going, that's another reason why, you have to be careful about always focusing on trading. It's a very short-term way of thinking. And I know because I used to be that short-term thinker. And 10 years ago, if you watch any of my videos from 10 years ago, I didn't talk much about buy and hold because back then I didn't even have any kids. One of my wife was still pregnant at that time when I started teaching online. But, I wasn't into buy and hold like I am now. With responsibilities I have now, I'm like, yeah, I won't say can't. It's more difficult being a trader. So I have to compensate for that by having buy and hold so that way I still make money. All right, moving on here. Someone asked me about owning stocks. What do I think about owning stocks versus ETFs? If you're a Success Academy member, you already know my thoughts on this because I am not bashful about sharing my thoughts. Most people should not be investing in individual stocks, period, end of story. See my last 30-day challenge on that because I recorded 2 videos about that. I think it was my 5 rules of stock investing. I think there's some function on YouTube where I can make it the next video, but yeah, that's it. I'll just end there because I've already beat that up enough in those previous videos. And this person followed up by saying that seems like you can get, I think they said, more bang for your buck or growth from a good company stock like Apple, J&J, and Google. You sure can. And it does not come without a cost, right? There's no free lunch in the stock market. If you get more bang for your buck, then you get more bang for your buck on the downside too, right? And I said I wouldn't talk about individual stocks. I'll just say this, it's a higher likelihood that an individual stock can go to zero than 500 stocks like the ETF can go to zero. So it's just a risk thing, right? 2, if you're not going to be a professional like Buffett, and literally I have somebody I know that owns like 30 stocks. And I was like, wow. And I was being sarcastic. I'm like, man, How do you find time to read all those annual reports and go through the company earnings announcements and things like that? And they were like, I don't. I was like, yeah, exactly. But you should be if you're investing in individual stocks, if you're approaching it like a professional. Last question here before I let you all go. Somebody says, it was just a funny comment, but I'm going to use it as my final takeaway. Somebody said, you better stop being mean to your wife. Remember, she's getting half of everything if it goes south. And I know it was a funny comment, but I don't talk much about this. But one of the reasons I taught my wife how to invest is out of a form of love, right? No one that I've met said, hey, when I got married 10 years ago, I got married just to get divorced, right? Every single divorced person I know, I've talked to, it always came as a surprise. When they got married, they didn't plan on getting divorced, right? Nobody gets married and plan on getting a divorce. And, you know, people talk about how emotionally draining divorces are and how costly it is and things like that. So I was like, okay, if nobody planned for it, but yet it still happened, right? There's a book title, I think, called Life's Not Supposed to Be This Way. So think about that. That wasn't a goal of theirs. It wasn't on their, you know, what do they call it? New Year's resolutions. Oh, I want to get divorced this year, right? But it still happened. So isn't it more prudent just to plan for it? So I was like, okay, well, I don't plan on getting divorced, but obviously nobody else did, but it still can happen. I can't predict the future. I always tell my wife, I'm never going to be like, I'll never cheat on you. I was like, I don't know. We can't predict the future. I might say I don't want to, but even that, I talked to, matter of fact, one of our marriage counselors, he had went through a divorce, and he talked about, you know, I had asked him, well, how does it work when you cheat on your spouse? Like, is it intentional? And he walked through like, no, it's not like you wake up, say, I'm going to cheat on my wife. It's kind of starts small with casual conversation. And then, you know, you like talking to this person, and then you start sharing feelings. And then he said, once you go below a certain communication level where you're sharing feelings, you get more connected, and then it just spirals from there. But it's not like you premeditated any of it. So even stuff like that, like, I don't know if I ever get caught up like that. We try to put systems in place so, you know, I don't get caught up like that. But still, anyway, the whole point is I taught her investing because I was like, okay, I have some members who are females, and they will say, hey, my husband was in control of all the money, but we got divorced. He took everything and left me with nothing. I have the kids, and I have no money. Right? They're stranded. And I was like, I never want my wife to be in that situation. So I was like, if we ever, you know, we don't plan on it, but I was like, if we ever split up, I want her knowing how to take care of herself. I want her knowing how to invest on her own so she's not dependent on me, a piggy bank, right? You know, hopefully she's not greedy and want to take all my money because she's like, well, I don't care. We can split everything half and half because I know how to invest now. I'll be good to go. And she doesn't have to worry and stress about getting a job and things like that. So out of a form of love, I'm like, hey, you need to learn how to invest. Even still, even if we don't get divorced, like women outlive men, right? So I was like, you need to be able to take care of yourself when I'm not around, right? You can't always leave everything dependent on me. So that's one reason why I taught her. It's a form of love. I always wanted her to be taken care of. Even if we split up, I was like, I want her, right? She's the mother of my kids. If we split up, maybe I won't like her anymore, but still, it's like, that's the mother of my kids. I want the mother of my kids healthy, and I want her well taken care of financially. Last point on this is that, where was I going with this? What's the last point? All right, now definitely wrapping up. I don't know if you can hear the music in the background, but I'm about music studio. Last point about this is that it's something my mentor taught me. I honestly don't care if she takes half. And that's what my millionaire mentor taught me, is that the skill set, okay, you can be in the video. I'm not editing that out. So, yeah, and I'm here with my son. I think he just walked past me. But anyway, the skill set is invaluable. Nobody can take your skill set away. So he was saying they could take all of my money away, but I have a skill set nobody can take away from me. He said, so if somebody came and they stole all the money out my bank account, he said I'd have it all back in 2 years or less. Why? Because it's a skill set that generated the income. So yeah, go ahead, wife, take it if you want. I don't care, right? I still have the skill set that generated the money in the first place. So as long as I'm cognitively still here, right? You know, again, unless I have a stroke like my brother and things like that, I'll still be able to generate the income. So it's a skill set you focus on, not the money. All right, you all take care. See you in tomorrow's video. Bye-bye.